Well, we're back with you here on the Market Day Report on a Monday, the first full trading week of 2017. Let's dive right into our grain trade and see what the futures are doing. Let's look at that corn market first today. So as we go to the big board in Chicago with live quotes here for you, let's take a look at that March contract, which right now is down a penny and a quarter. Not a big loss at all, but it is down a little bit. We're trading at 356 3/4 per bushel, and in the May contract, we're down a penny at 363 3/4. Soybean trade so far this morning, we have the March contract now 3/4 higher at 995 1/2 per bushel, and the May at 1004 1/4 would be up 3/4 cent, so not a big move there either. On the wheat trade in Chicago wheat, we have March now trading a penny higher at 424 1/4 this morning. The May up a penny and a quarter. On the Kansas City market this morning, we have March now a penny higher at 434 1/2. May 1 1/4 higher. And in the Minneapolis spring wheat trade, we have the March up 3/4 at 553 1/2. Let's jump to the cotton market this morning. And in the early going, we have March cotton backing up by 13 points to the downside. It's quoted at 73.86 cents per pound. Let's go to the phone and welcome Dewey Strickler, a regular contributor here on the Market Day Report. He happens to be with AgWatch Market Advisors in Franklin, Kentucky. And Dewey, happy Monday to you here. A very quiet start the way it appears.
Yes, it is, Marlin. It's just mostly like watching paint dry today. We're looking at a very light volume session here so far, and about the only features that I see here, and that is today we're going to start looking at the index funds, rebalance their position there. And, of course, on Thursday we do have the grain stocks and also the final crop report. So we'll be seeing some evening of positions prior to that.
Well, you bring up a good point. We have 4 major reports coming out on Thursday, all at the same time at 11 o'clock in the morning Central Time. So it'll be the crop production report, it'll be the supply and demand report, it'll also be the winter wheat seedings report as well, and a quarterly grain stocks report. All 4 of them have potential to move the markets. What do you think the trade will focus on more than anything else?
I think they're going to look to see what USDA does with the acres, see if there's going to be any final changes. They'll be looking also at the yield to see what they do there. I think that they will probably put equal importance on what wheat acres are going to be and also on South America's crop. As far as like looking at our usage numbers, I think that they'll probably be a secondary look.
Well, Dewey, what are you hearing from South America? Is there anything threatening going on with that crop down there right now?
Well, you know, what we've got like in Argentina, you got some places a little bit too wet. In Brazil, you got some places a little bit too dry. But, you know, the trade just doesn't seem that concerned about it because you have that in the U.S. every year. So, you know, we're looking at the prospect of seeing those numbers increase here on Thursday.
Now, right now, the U.S. dollar value is very quiet, but the crude oil market really getting hammered here this morning. We're over $1 lower per barrel in crude oil prices. Here's a look at West Texas crude. My goodness, down $1.29 per barrel at $52.70. That's on the February contract. Is that anything that could weigh on the corn futures today?
Oh, I don't know. It's always possible that it could. I think the trade is really looking more at what we're going to be seeing Thursday rather than some of the other markets.
All right, Dewey, we're going to pause for a little break, and when we come back, we're going to take a look at our livestock market action as well. Our special guest, Dewey Strickler, we'll have more with Dewey when we come back after this. Well, before we get any further in our conversation here with Dewey Strickler, he's with AgWatch Market Advisors in Franklin, Kentucky. I don't want to forget to mention a couple overnight export sales that we did have on the books. It's nice to see a few returning once again. We had one for wheat and we had one for corn. This time around, we had 112,500 tons of corn that was sold to unknown destinations. And then we had another 120,000 tons of hard red spring wheat that was sold to unknown destinations as well. I wanted to make sure I passed that along before we got into the livestock sector here. Now, looking at the livestock trade here, Dewey, we had a very quiet cash cattle trade as we wrapped up last week. Seemed like the market basically held in there with market prices on the cash side. They were fairly steady with what we had the week before. We had the February live cattle opening this morning. We're now trading 16 higher at 114.98 per hundredweight. The April contract up a dime at 114.30. June down 13 cents. So at 113.85. I'll remind everybody that the way we closed on Friday, we had the nearby contracts under pressure on the live cattle and the lean hogs. The deferreds were just a few pennies higher, so we're kind of reversing that right now. And now, just as I say that, everything has a negative sign now by a few cents. Now, turning to the feeder cattle trade in the early going today, we have March feeders down 18 cents. We're priced at 123.62 per hundredweight. The April down 25 now at 123.45. So, Dewey, let's talk about this cattle market side here first. Technically speaking, and demand speaking as well, the export sales were really bad on the beef and the pork last week. Of course, I assume probably a lot of that had to do with the holiday.
Oh, I think it definitely did. We were looking at 1 day short last week and also a day short the previous week there. Want to look at the cattle. We've got some warmer temperatures in the forecast here, so that should probably put a little pressure on the market. Technically, I look at the cattle market, and it looks like we do have a good top end up here for a while. I would look for the cattle to drift sideways to lower over the next couple of weeks, possibly move down into, I'd say, at least the 113 mark, basis the February contract, probably down to about 112, maybe a little lower.
Would that be some sort of retracement level, or would that be further down than that?
Retracement could be further down here, Marlon. We may be looking at eventually the February contract going down to about the 109.
Really? Okay, so we'll have to keep our radar up for that. Let's take a look at the lean hog side here. On the lean hog futures, this is how we are opening up. February down 43 at 63.55. As I mentioned, I think February was down 90 cents last Friday. April, though, was just a few pennies higher Friday, and we had April now 35 lower at 67.85. Has this hog market just gone flat? It seems like it's gone sideways for about 3 weeks now.
Yeah, it has, and it looks like it's in a correction from the top that we had up here about 67 basis the February contract. That being said, I can't rule out the market going up and setting one more new high, but the market looks very tired, looks very weak. I think that what could offset that would be if we start dropping below this, say, 62.5 area. Then I'm going to look for the hogs having a break down to about 60 or maybe even as low as 57. But right now we still look like we're in a correction for the top. So we may see one more high before we see a good hard break.
All right, thanks, Dewey. Appreciate it. Dewey Strickler with AgWatch Market Advisors. He is based in Franklin, Kentucky. Give him a shout for more market info. That's how we're opening up. Very quiet so far.
All right, thank you very much, Marlon.